Hello and welcome to another Trades and Tutorials video. This is Jeff Bish, president of MarketGauge.com, and in this video I am going to look at an intra-market relationship that you can easily follow with ETFs. It can help you identify when the correction in the US stock market might be bottoming, when any turn in the US stock market up might be one to follow, as opposed to wait for another correction down to the lows. But before I get into all that, let me just make sure that if you're just finding us on YouTube, please subscribe to our channel. And if you're not already aware of the other resources that you can find great free information, trading tutorials and trading ideas, go to marketgauge.com/tutorials. Also follow us on Twitter at one of two handles, at MarketGauge and at Market Minute. I think you'll find the information you get there just as valuable. And finally, if you don't already know, you can see this video in HD by using the settings in the lower right hand corner. So let's talk about intra-market relationships. Now, the one I'm going to talk about today isn't really a direct correlation, but as I was drawing in vertical lines in the EEM, which is the Emerging Markets ETF, and if we look at this from a big picture point of view, right now there's a big focus on the emerging markets because they've just gotten absolutely hammered, as you can see by the weekly chart here. Gotten absolutely hammered from 2015 high around 44 down to about 32 right now. And that's in part because the fear of rising interest rates in the U.S. will put more pressure on emerging markets, as well as commodity prices have been pounded. That hurts them as well. But these are all, growth-related fears that the U.S. markets have also, started to worry about. So if you go back and you just look at the stability and the trend of EEM on a weekly basis and use that as a general barometer of the either headwinds or tailwinds for the US market, I think you'll find that it's a pretty good indication of whether or not the US market is running into headwinds or tailwinds. Now, I put in these vertical lines just to make the video go quicker, but the idea of the vertical line was to look at the EEM, and the green line here is a 10-week moving average. So that's the equivalent of about a 50-day moving average, and that is the same for the SPYs up top. And so if you were to just use the very straightforward basic analysis, which is if the EEMs are not doing well, in other words, they're trading under their 50-day moving average, then the US probably also is going to have trouble. And what you'll find is oftentimes the EEM will lead. Not always, but oftentimes. So in this case, if we look here, EEM breaks down way before the US breaks down. All right, so it really gets hit harder and it continues to move lower. So in this period, if we were looking for the SPYs to break out, we'd also be looking for the EEM to confirm it, and that really didn't happen. And when it broke down, the EEM was right there with it. Now the EEM got worse, right? But the EEM continued to get worse, and it wasn't until the EEM bottomed that the SPYs also bottomed. So it's a coincident indicator in this case, but again, if we follow this, you can see EEM gets better, but then doesn't continue. It's not until the EEM really starts to trade higher that the US also trades higher. Okay, now EEM does not consolidate. It just starts to go right back down, and as a result, or I should say coincidentally, the SPYs also have trouble. And once again, when EEM stabilizes and starts to head higher, and this is kind of what I'm suggesting we look at or look for right now. EEM stabilize, start to move higher, and if that coincides with the SPYs moving higher, then you've got a much better chance of the SPYs actually demonstrating that they've put in some kind of a bottom. If EEM doesn't doesn't coordinate with the, or I should say, corroborate the idea that markets are turning, then we're going to be a lot more skeptical. Okay, so EEM trends higher here, but during the same period where EEM is struggling, SPYs also struggle. EEM gets going in a strong way. SPYs actually take a little bit longer to get going, but once they do, they trend higher. Now here's a situation where EEM struggles, but SPYs continue to move higher. So it's not going to be 100%. But it's a warning. It's a big warning that if we don't have EEM in cooperation, watch out. Okay, and oftentimes EEM will lead on the downside, as I pointed out. Here, EEM is breaking pretty hard as SPYs are just consolidating, and ultimately SPYs take a pretty big hit there. It doesn't seem that big right now, but at the time, it certainly was not comfortable with that break under the 50-day moving average. And once again, EEM consolidates, or I should say stabilizes, moves higher, and that's where we see a nice move higher in the SPYs. EEM struggles, SPYs kind of go sideways until EEM gets going, and then we get going again as well. So you can see the picture, and this actually now looks a lot clearer in terms of a big heads up that the big move in stocks now may be coming to an end as EEM's getting weaker. EEM doesn't even come close to its high as SPYs are trying to push to new highs. And then if we look at how this plays out over 2015, it now becomes obvious that EEM was really screaming to watch out as it was breaking down through a major swing low here as the SPYs were just consolidating in their range. So once again, this is one other indicator that when the SPYs broke down, it was really the last straw. And in this case, looking at the world, or certainly the emerging markets, the last market to hold up before it just had to give in to the pressures that were obviously affecting the rest of the world. So where does that leave us right now? As I've already hinted, leading up to this, here's the 50-day moving average, or the 10-week moving average. As the markets try to figure out whether they're going to go down or up, certainly if the SPYs move lower, we want to see the EEMs, which will probably be moving lower, hold their lows as well as the SPYs. And over the coming weeks, if we see EEMs turn up, then we could be a little bit more confident in the turn up in the SPYs. However, if EEM continues to move lower and SPYs continue to move lower, then it's probably not a good idea to be too aggressive with the bottom fishing. All right, so a really simplistic approach, doesn't take a lot of time. It's a matter of simply assessing the basic trend or the basic consolidation in the EEM and applying that to whatever's happening in the SPYs. So I hope that helps, and I will see you in the next video.